In today's video, we're going to take a look at Microsoft along with Apple's analyzing their pre-earnings personalities. For this video, I'll be using our pre-earnings analysis indicator. This is available for free for all Volatility Box members with your membership. Just head over to tosindicators.com/earnings, scroll down, and there you'll find the pre-earnings analysis indicator. If you'd like to learn how to use this indicator, I also have about an hour-long, call it webinar type video here, which walks through a bunch of different examples along with things like which options should you use to trade this particular ticker, which has these patterns. Now we're going to go through two additional examples in today's video, and that's Apple and Microsoft. Let's start with Microsoft first. Microsoft reports earnings April 25th after the close. We have 2 days left for this particular symbol to report its earnings. And if we take a look at its pre-earnings personality, this is where I think Microsoft becomes interesting. Typically, prior to earnings, about 75% of the time, Microsoft tends to rally. 25% of the time, Microsoft tends to fall. If you take a look at the average percentage that we rally, that's right around 3%, versus the average percent that we fall is 2.7. So our rally is also a little bit greater. If you take a look at the implied volatility now, we can see that 60% of the time, the IV tends to rise as we get closer and closer into earnings. Now, in Microsoft, with this particular earnings cycle, we can see that in the 7 days prior to earnings, instead of seeing that same bullish optimism that we're used to seeing, we instead saw a little bit more bearish pressure, something that we didn't expect to see. Now, I think there's a few different ways that you might construe this, but to me, the way I'm looking at this particular chart is we have this positive bullish tendency in Microsoft, which typically tends to happen, which is not yet kicked in. We have 2 days left prior to earnings for this tendency to actually kick into full gear. In order for this count to increase by 1, meaning this particular earnings cycle, we saw Microsoft rise into earnings, we would need to close above that 7-day price level. Call it near 414.50 is a nice clean round number. So if Microsoft can get above 414.50, then we can see that this count would increase to 31, and we would have played essentially into this overall idea of Microsoft rallying into earnings. If we also look at a chart of Microsoft, this idea makes a little bit more sense, given that we're coming into previous support areas where you might expect to see some buyers anyways, and for that pre-earnings optimism to kick in. So I think for those of you looking for buy the dip type setups, Microsoft is one where we have data which tells us we expect Microsoft to rally into earnings, and that has yet to happen. So you might call this a better entry price than what you might have had if you had blindly bought 7 days prior to earnings. Now, if you compare this to Apple here, you should notice something a little bit different in Apple. With Apple, the earnings is still a little bit of a ways away, and today is that 7 days prior to earnings. We've just entered that window. May 2nd, after the market closes, is when Apple will report. Now, inside of Apple, if we look at the same data, price and IV analysis, we can see that Apple tends to rise only about 57% of the time compared to the 75% we saw in Microsoft. The gain is, of course, a little bit higher, 3.29% versus the 3% we saw in Microsoft. But the implied volatility doesn't tend to rise as often either. In Microsoft, we had a higher number here for the IV rising, Apple not so much. Apple also, if you zoom out, we are coming into previous support, very similar to Microsoft, and Apple has had a little bit deeper of a correction, where you might argue that, hey, this is actually the slightly better or more interesting opportunity. In both cases, I think you have some interesting setups. Microsoft, because you're playing this overall tendency of price typically tending to rise into earnings, hasn't happened this earnings cycle, so you're betting on the fact that, hey, it's going to kick in the final 2 days. Apple, you have a bit of time, so you can actually play or let this move play itself out, and you're buying at what is essentially previous support right here near where we had our previous low around that 165 price mark. So both Microsoft and Apple look very interesting to me, and hopefully through today's video, you can see exactly why that is with some actual numbers behind this. For this exercise, I used a 10-year analysis, but if you wanted to expand this to the max available, you could do that as well. Maybe you'd like to just see 20 years, or maybe you'd like to see how this is varied even over 20 years, 10 years, and then maybe a shorter time frame of 5 years. those are some next steps that you might take to investigate these setups a little bit further. I hope you found this video useful. Again, for all Volatility Box members, you can download the pre-earnings analysis indicator for free on our website. It's included with your membership. That's tosindicators.com/earnings. And with your membership, you also have access to a post-earnings analysis indicator in case you'd like to trade any of the symbols that have already reported earnings, like say Tesla today after the close. Take care, everyone, and I'll see you in our next update.